You may know that the banking system we have in the West is the source of many of the ills of our modern economy. Modern finance and monetary policy is rife with greed and collusion, while acting as a net drain on public coffers in the form of extractive interest and fees paid to profiteers. There is an alternative, and it's gaining momentum in movements across the U.S. The public banking model, where the power to mint money is restored to the sovereign state, where monetary policy is directly tied to investing in public policy needs, and where profits are reinvested instead of extracted. Think this idea is unrealistic? Think again. This model is proven to work. Here are 9 examples of public banking and sovereign money creation in history you probably haven't heard of. 1. The Quakers in Pennsylvania. Pre-revolutionary America saw much experimentation with monetary policy. Many colonies financed their operations by going into the banking business. Colonial loan offices called land banks issued paper money which they lent to residents at low rates of interest, which would be paid back to public coffers, funding the colonial governments in place of taxes. From 1723 to the 1750s, Quakers in Pennsylvania developed the most successful land bank, stabilizing the currency and providing a significant revenue for the state while stimulating the economy. Even Adam Smith, in his famous book, The Wealth of Nations, commented on this. Quote, "The government of Pennsylvania, without amassing any treasure, invented a method of lending what is equivalent to money to its subjects. By advancing to private people at interest paper bills of credit, it raised a moderate revenue which went a considerable way towards defraying the whole ordinary expense of that government." Why did this public banking experiment end if it was so successful? As you might have guessed, it was sabotaged. In 1764, Benjamin Franklin unsuccessfully petitioned the British Parliament in favor of continuing the colony's benefit of money creation. Unswayed by Franklin's lobbying, they then passed the Currency Act, declaring, quote, "No act, order, resolution, or vote of assembly in any of His Majesty's colonies or plantations in America shall be made for creating or issuing any paper bills or bills of credit of any kind or denomination whatsoever, declaring such paper bills or bills of credit to be legal tender." 2. Greenbacks. Abraham Lincoln was elected in 1860, prompting a secession and civil war. It was a two-front war, militarily in the South and politically against the Northern bankers. Only recently, the main brokers of slave cotton. The Eastern banks had agreed to a $150 million government loan package, who would then resell those U.S. bonds in England, putting the United States at the mercy of the British aristocracy. Lincoln's response was to issue $150 million in U.S. notes or greenbacks through the U.S. Treasury via the Legal Tender Act of 1862. Predictably, the dominant banking interests lobbied to reverse this trend. A letter issued by bankers in New York to every bank in the U.S. read, quote, "It is advisable to do all in your power to oppose the issuing of greenback paper money. To restore to circulation the government issue of money will be to provide the people with money and will therefore seriously affect your individual profit as bankers and lenders. See your congressman at once and engage him to support our interests so we may control legislation." And that was the end of the greenback. 3. RFC. In the 1930s and 1940s, the Reconstruction Finance Corporation was America's largest corporation and the world's largest banking organization. It allowed the government to fund the New Deal in World War II without turning to Congress or the taxpayers for appropriations. It generated massive infrastructure and development all across the country while returning a profit to the government. The RFC Act of 1932 raised capital for the public corporation, generating funds for roads, bridges, dams, post offices, universities, electrical power, mortgages, farms, and much more. It funded all of this while actually making money for the government. The corporation invested approximately $10.5 billion, which was returned to the Treasury within approximately $500 million in profits. But with the end of the Depression and World War II came the desire to return to status quo, and the corporation was dissolved in 1957. 4. The Commonwealth Bank of Australia. Following economic troubles, the Labour government of Australia chartered the Commonwealth Bank of Australia, a nationally owned bank. The main architects of this bank, Dennis and Miller and King O'Malley, had both been private bankers themselves and so knew the great secret of banking, that banks create the money they lend simply by writing accounting entries into the deposit accounts of borrowers. So, they realized, why not turn this insight to the advantage of the public? The Commonwealth Bank under Dennis and Miller raised hundreds of millions of dollars for both world wars without beholding the country to London bankers and continued to grow into Australia's largest bank until it was privatized in the 1990s. 5. The Bank of Canada. In 1935, Prime Minister of Canada, William King, said, quote, "Until the control of the issue of currency and credit is restored to the government and recognized as its most conspicuous and sacred responsibility, all talk of the sovereignty of Parliament and of democracy is idle and futile." In this spirit, the 1938 Bank Act nationalized the Bank of Canada. Now, the interest collected from bank loans would recycle back into the federal treasury. For 3 decades, this bank funded infrastructure and social programs. The low-rate financing it provided helped the Allied war effort, and 54,000 returning vets were given financial aid to attend university, vocational training, and cheap loans to buy farmland. And the bank eventually funded Canada's national healthcare system. The bank was privatized in 1974. And just look at what happened to the Canadian national debt after that. 6. Kiwibank. In 1935, New Zealand elected Prime Minister Michael Savage, architect of free education and healthcare, pensions, and other social programs, including nationalizing New Zealand's central bank, which underwrote loans at 1% interest for the development of low-cost public housing and to stimulate local industries. The IMF strong-armed the New Zealand government, which privatized banking in 1984. But in 2002, New Zealand launched a new state-owned postal bank, the Kiwibank, to provide retail banking services to communities. It still exists today, serving a significant portion of the New Zealand population. 7. Modern Germany. Less than 10 years after World War II, people were already talking about a German economic miracle. By 2003, it became the world's leading exporter and continues to be a dominant force in the world economy. An overlooked springboard to Germany's success is its network of public banks called Landesbanken and municipal Sparkassen banks. In Germany, 70% of banks are either public or cooperatives and invest in regional small and medium-sized businesses, which make up 90% of the German economy. Bank of North Dakota. In 1919, the farmers in North Dakota banded together as a nonpartisan league and successfully lobbied the North Dakota government to charter America's first modern public bank, the Bank of North Dakota. For over a century, they've provided financing for agriculture, small businesses, student loans, and public infrastructure and have been raking in profits consistently, much of which is redeposited back into the state's general fund. It supports local community in banking, and as a result, North Dakota has the highest ratio of community banks in the country. China. The top 5 banks in China, the Industrial Bank, Bank of China, Construction Bank, Agricultural Bank, and Bank of Communications, are all state-owned, with the Industrial Bank being the biggest bank in the world. In addition, China has a large number of city and county banks that serve local regions. A whole documentary would be required to unpack the Chinese economy and monetary system, but success speaks for itself. Much of China's modern economic miracle, which lifted tens of millions of people out of poverty and catapulted the nation from a peasant society to an economic behemoth at dizzying speed, happened under the watch of China's public banking system. So, public banking can and does work, as history shows. What history also shows is the degree to which the private bank cartel will go to discourage it. Nonetheless, as this idea grows in popularity, as people start to realize its benefits over the current dominant system in the West, opponents will inevitably try to respond that there is no way it can work. Now we know it can.